Time now for our markets outlook, thanks to our partners Forsyth Barr. We're zeroing in on the Kiwi dollar this morning with Forsyth Barr investment strategist Zoe Wallis. Zoe, good morning.
Good morning, Ryan.
Good. Why are we talking about the Kiwi dollar this morning?
Well, it's been an interesting little ride for the Kiwi dollar over the last few months. We've been pretty steadily trading within this range of about 55 to 60 US cents. What we've seen over the last few weeks, or really since Trump put a pause on tariffs back in mid-April, has been the Kiwi dollar's actually appreciated quite markedly. So we're now poking above 60 cents. And big question about whether we start staying there. And I guess it's an important question for our export sector, who've actually experienced quite a strong tailwind from the recent declines in the Kiwi dollar we've had over the last year or so. But also, for those people who are looking at heading overseas, it changes the price of what it means to travel.
Yeah, so great if you're going on a holiday, which not many people are at the moment, to the US, but not so much for our exporters. So how long are we expecting it to stay, above the 60 mark? What is the outlook?
Yeah, look, so we don't exactly forecast currency, but I think what you've seen is that there's been a pretty stable range between 55 to 60 US cents. That's now been broken out of, and it looks like we're establishing a new trading range above that 60 cents range. So we might be in a new trading range of, say, 60 to 65 for some time. Question mark over the sort of how sustainable the key drivers are, one of which is we're seeing this general trend towards US dollar weakness as people are concerned about the fiscal outlook in the US. The other one is obviously we're seeing quite a strong tailwind from our commodity sector, and we've been talking about this on the show before. Really great, performance from our commodity and our export sector in terms of prices and volumes. And the other is that hopefully we're starting to hit a bit of a turning point in our economic cycle. We're getting to the bottom of interest rate cuts or nearly there. We're also seeing the economy start to pick up, although we still think we're in a pretty slow, steady grind in terms of how that economic growth picks up over the year ahead.
Yeah, I was just asking the Prime Minister about that actually, because we've got Q1 GDP data out next week, right? Which is obviously backwards looking, but it still doesn't feel like things are taking off.
Yeah, I think that's a fair point. There's this whole mantra as people were looking ahead to 2025 that it was going to be, survive until 2025 and then thrive. And really what we've seen over the 6 months to date it's been pretty mediocre. It's gradually improving. Things are picking up, and you can see particularly our export sector, so commodities and also tourism have been holding up really well. But other areas of our economy, like services, for example, and consumer spending is still pretty cautious and pretty sluggish. So we really want to see a bit more momentum coming through on that side of things to help things pick up more substantially as we head towards the end of the year. And hopefully that flow-on effect from interest rate cuts that have been delivered to date will help that provide a tailwind on that.
All right, so I really appreciate your time this morning. Thanks for that update. That's investment strategist Zoe Wallis. Thanks to our partners Forsyth Barr.